Welcome to the April 18th, 2022 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. This video series, YouTube McGowanGroup, is proof that we love our clients. I am Spencer McGowan, and thanks to the team, your financial weatherman with your weekly fast-paced tour of the financial markets. I'm President, McGowanGroup Asset Management, based at the Crescent in Dallas. Be sure to set your time for a Zoom or to come down and meet the team that cares. Let's get your plan updated for the inflation and all of the headlines that you've seen. Let's dissect it with precision. Dow Jones Industrial Average down year to date nearly 5%. S&P 500 down 7%. And we're about to get to the NASDAQ here. The tech stocks smacked down actually at the close of the week about a minus 14% on the NASDAQ. That's multiple contraction. It corresponds to inflation. The tech stock multiples coming back dramatically. We can see some of the price declines in the home building related stocks. Builders First Source here in Dallas down about 25%, and you could see the correction in D.R. Horton, America's home builder based in Fort Worth. They're down over 30% for the year, anticipating a slowdown in the housing market because mortgage rates are up. Now, S&P 500 earnings reports coming in as we speak for the month of April, which is basically first quarter earnings reports. There's one notable thing in here that has to do with the Federal Reserve tightening. See the financials right here? Four big banks, JP Morgan, Wells Fargo. Goldman Sachs did great on commodity trading, by the way, but on the consumer-based financials, they took hits. Earnings down 36% so far. What's happening? They're making reserves for defaults, for they call it a credit reserve, being if people don't pay their loan. Why are they doing that? Well, Warren Buffett famously said, when the tide goes out, you find out who's been bathing naked. And what you're seeing is the Fed dialing back liquidity and tightening the available dollars in the system. And where the defaults come from, well, it remains to be seen. The rest of the companies, there's only 24 out of 500, so we're going to revisit it next week. Be sure to subscribe, and we'll be back with that report. Sector performance so far this year. The energy sector extended their gains to 43%. Oil bounced back to about 104. The utility sector, 6.6%. Notable, natural gas this week hit $7.20 per million BTUs. There's only 7 months in history that natural gas has been higher. And if you seasonally adjust it, it's pretty much an all-time high for natural gas. Communication services down 15. The IT sector, as we covered, technology stocks down about 14%. Here we go. This is the interest rate. The 90-day T-bill this week moved up to 0.75%, signaling that in the May 4th meeting, well, actually, it could be a 0.5% increase in the cash rates. It means your money market rate's coming up, and you can get a 2-year treasury right now at 2%, which is actually a pretty good rate. If you're going to leave the money parked for 2 years, that's better than a money market. And 10-year treasury goes all the way to 2.8%. The 30-year treasury goes to 2.9% this week. That's caused the value of bonds to be down. The Vanguard total bond market is down 8% for the year, and it started the year with a yield of just 2%. That's 4 years to break even. The fixed income allocations that most advisors use are actually broken. All right, what is this? This is called disinflation, I believe. Okay, look at these peaks right here. These are February, March peaks in different commodities. Since the peak, and we told you fast and loose commodity trading defined a range, and you've probably seen the high in commodities prices for quite some time. Coal down 29%, lumber down 42%, platinum is down 15% from its peak, and oil's down about 17%. Remember, it hit 130. So what is this telling us? Disinflation. It means that inflation rate everybody's so worried about. This tells you, hey, you've got some components here that are already being set back. Now, this is the energy sector year to date. Those stocks up about 44%. And of course, that's leading the charge. A lot of institutions having to catch up because they sold traditional energy and they were all going green. Well, not so fast. It's all hands on deck for the energy crisis. Here, I wanted to take you back to the 70s. So this chart, very important, 1978 through 1982. All right, so get in your Camaro in your leisure suit and let's remember the 70s with your mod haircut. All right, this is the S&P 500. This is inflation. You could see inflation went to 15%. S&P 500 was up 3%, 78. It was up 12% in 79. Of course, the energy sector drove a big part of that because oil prices were high. 1980, you could see we had a setback, and then it was a 26% year on the peak year for inflation. Then you got disinflation. They raised the rates so high that you had a big sell-off right here. You actually had a big sell-off right here, but it was still a good year before it was over. So you get more volatility. Now, the S&P was down 10% in this final year, 1982, or 1981, down 10% as they raised the rates, and 1982 it was back up 15%. My point is this, the inflation did not necessarily cause bad performance in equity. You had to be in the right sectors. What are the right sectors? Good brand names with pricing power. Yes, the energy sector, the medical dividends are doing great. And so that could be an answer, at least so far this year, based upon performance. But this disinflation trend, how soon do we enter that? This week's inflation report said 8.5% consumer inflation. And by the way, the month of March, inflation annualized at 15%. You take 1.2% to the 12th power, you get 15% annualized inflation, at least for that single month. But those commodity prices have already come back down. How soon do we get disinflation? Well, stay tuned to Net Worth Radio, McGowanGroup, Net Worth Radio on the Apple Podcast, and YouTube McGowanGroup will keep you informed. This is our dedication to our clients' success going forward, and be sure to set your time to update your plan for the inflation. I'm Spencer McGowan, President, McGowanGroup, NetWorthRadio.com. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and NetWorthRadio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.